Joining us now for more is Josh Mahoney. He's Chief Market Analyst at Scope Markets. Now, Josh, it's the third day of losses for global stocks. What's been triggering this global sell-off?
Yeah, I mean, on the stocks front in particular, on the tech front, it really started with the announcement from Anthropic, where they came out with their Claude AI tool or plugin that aimed to provide solutions for a number of different areas, the finance segment, the legal segment, and suddenly we saw this undermine valuations within the software companies in particular. And that then just spread to people wondering what other companies are going to be rendered largely useless, or at least going to see significant demand destruction and margin destruction with these new cheap tools that are going to be coming out from AI. And then on top of that, you've got earnings from another number of these companies. And as you've alluded to, Amazon, the latest ones to come out, markets are expecting 146 billion in terms of capex spending this year. It came in at 200, and given the fact that earnings per share was below expectations, you can see why people are a little bit concerned with those spending levels.
Right, and on that note, tech giants aren't making the returns from their massive AI spending. So how long until investors stop paying into the frenzy?
Yeah, do you know what? I mean, some of them are, some of them aren't, but I think pretty much all of them are being sold. Amazon was 4% down before they even reported their earnings, right? So the sentiment within the industry as a whole is very poor. And those that manage to beat expectations see very little in terms of additional gains on their share price, whereas those that underperform see their share price absolutely collapse. So sentiment certainly is very poor within the segment at the moment. That doesn't count for all parts of the US market. There are many parts of the real economy, so to speak, that are actually seeing a significant pickup at the moment. So it does feel like it's a reallocation away from tech and towards the so-called real economy.
And looking at metals, they've been incredibly volatile recently. What risk factors are traders focusing on?
Yeah, I mean, that really sort of kicked off in a big way around the announcement from Donald Trump that Kevin Walsh was going to be his nomination for the Fed chair. And markets didn't take that very well because if you look back at his comments, they were particularly hawkish. So in the past, he's always been fearful about inflation at times when clearly easy monetary policy was needed. However, if you look back at his comments, he's always dovish when he's trying to angle for the Fed chair role and hawkish when he's not. So perhaps under Donald Trump, he's going to take a different stance. But certainly right now, we're seeing a really significant downside, in particular in silver. But it was a momentum trade, and really that momentum has stalled in a big way.
And Bitcoin is also rebounding from that 16% drop last night. What's the appetite for cryptocurrencies at the moment? And do you expect Bitcoin to rebound to that $80,000 mark that many analysts had been expecting?
Yeah, I mean, first of all, it's worthwhile noting that Bitcoin generally moves within a 4-year cycle. We're within the sort of first quarter of that down cycle, that down year. So I expect it to be poor pretty much until October time before we start to base out. You add that alongside the fact that we've got very poor risk sentiment within the market. So markets selling off, that means that people probably aren't going to be super keen on crypto and Bitcoin. And then commodities valued in the US dollar. And again, we're talking about Bitcoin against the US dollar, where the US dollar has been doing well since Walsh has been nominated by Trump, and therefore really it all adds up to a pretty sort of dour market when it comes to crypto. I don't necessarily expect that to change anytime soon.
Josh Mahoney in London, great to have your thoughts. Thank